Welcome to Trading Lounge and the US indices for the 27th of March, and starting with the blank page here. Really, it's this current market for the S&P 500 is really all about this current top here, let's say. And within this current top here, we've got the 2800 here being a bit of a line in the sand here. Now, in terms of how I analyze the markets with volume, Elliott wave and the trading levels, the 2800 is a minor trading level, and when a market comes to a level, it can really only do a few things. It could either just come to the level here, drop and never come back, or it could just go straight through there. So those two things are possible, but if the market's going to stick to this number for a while, then there's really just three patterns that I see that occur at this level. One of them is where the market would come up to this level here and just come straight through it, and normally the distance above will be the distance below this area here. And then it works its way into this particular level here, and I call that the overshoot pattern. So this is it here, so it doesn't stop at the level, it just moves straight through and normally swings back down about the same distance it was as high as it was here, and then eventually finds support here and then continues on, and this whole thing here becomes a continuation pattern, corrective continuation pattern, and the market will continue to the upside. So that's that. The next one here is a bit like the classic trading levels pattern. In this case here, we have the arrival, the reaction, the first high above the level, which is in 5 waves in terms of Elliott, and then it would come down and pretty much sit on the level here and then move off again. So the resistance here becomes the support here, and then moves off in that area through there. So that's quite possible for this one here, really, isn't it? Because we've come down here and we've come down here and we've got this little pattern here, and we'll take out this high here, but we're not going to go long on this little high here. We're going to have a better strategy for that, because this move here can be down in 5 waves here, and if that's the case, then we have an A wave here, B wave here, and a C wave here in 5 waves, and then move down through to here. So in this case here, where we have the arrival, the reaction, the first high above the level, then an A wave, a B wave, and a C wave to here. So in that case, this is the most common pattern here, the classic trading levels pattern, where it has the arrival, so at the 2800, the reaction, the first high above the level, an A wave and a B wave here. This B wave's in 3 waves here, and that's what we're going through at the moment here, and then we come down from here. So once we get down to this point here, then we maybe even to the low of this one here, then the market needs, if it's going to be bullish, then it needs to find support back on this level here after this particular correction here. So that's what we're looking at. But it's at this point here, through here, is where it could fail and move much lower from that point. So we need to be mindful of that. So we could see it come back to this sort of level here. Normally there's some equality, the distance of this one here will be the distance of this one here roughly. So we'll take that on board there. And then secondly, this move down through here would be in 3 waves at that stage. Okay, so an A and a B and a C wave here, and then it can move up from here as such and continue to move higher from that point. But if it's going to turn into a bearish pattern, then we would see 5 waves down here in terms of wave 1 and 2, and be a longer move here for a 3rd wave, probably consolidate on that low. There's a 4th and a 5th. So if we do get this 5 wave structure here, then what that's telling us is we're going to be going down further at that stage. So then we'll see an A wave, a B wave, and a C wave here. May even retest the 2800 here again, and then move down. So our next move here, really, once this little move up here finishes, if it moves up here further, and we'll take a closer look at that, and then moves down through here, we've got to figure out if it's going to be 3 waves down here or 5 waves down here. Either way, we're not really going to miss anything, because on the short side we would go through here, But once we have those 5 waves there, we can track an ABC back up 50-60% and then look to short there. So we're not going to miss anything on the short side of it. On the long side of it, we're also not going to miss anything, because if we only get 3 waves down here, then we need for this to sit back up on here, and that will give us our long trade. So it's the patient people that make the money. So this is really where the setup is going to be here. The rest of it's just noise here. But also too, what we need to do is that, well, Pete, what happens if that just goes straight up from that point there? At what point are we going to go long here? So that's what I want to talk about at the moment, and also going short here. So with the shorts here, we can pretty much go short under these levels here, or the 2800 as a retested resistance. So if we go to the hourly chart here now, and this is what we're sort of looking at here. So looking at this as an A wave to the downside, it could also be wave 1. An A wave, a B wave, and a C wave up here. And we know that the 50-60% retracement level is up into, let's just get that on here. Oops, Daisy. So that's the 61.8%, and that's the 50. So that's kind of where we can be heading to, the 28-30 area there. Okay. Of course, it could go higher than that as well. It might even reach up to a 76% retracement level. However, what we will do in terms of going long is that when the market moves up into this space here, if it's going to be bullish, then this is the pattern it's going to be. It will come up and hit the level here, the old highs here. It will have a reaction, then it'll have the first high above the level, then it'll have an A and a B and a C wave here, and then we can go long here if it's breached there. So that would be the long trade at that point, because if the market if we've got 3 waves here and the market takes this high out here, then we know that it's corrective and will be moving up, and that should take you up to the 28.50 at least. And then you can get out there and get back in, because you'll be looking for the same pattern here at the midpoint there at the 50 here. So that takes care of that. On the downside now, we can look at, well, taking any of these lows out here now would be fine for any short trade. It might only get you down to down into this space here in that instance. So that means that it leaves us up into this space here if you want to get in a bit earlier on the short side. So what I can say about that is that when we're using the trading levels, we've got 2800 here, which is the minor level, and then we've got 1, 2, and 3 that make up subgroup 1, and subgroup 2 would be 65, 72, and 80 here, which will be basically these ones down here. But what I want to talk about is the number 2 here. So if the market trades above the number 2, gets on support here and trades above there, like does all this stuff here, right? But then comes back here and finds the 28.20 as the resistance, then you can look to short. But what you have to do is you have to allow it to play out. So when it comes down here, it will bounce back up, and then it will come through here, and it can come down to the 15 here, the 5, like another little midpoint, and then it's likely to bounce at that point. So then that's where your short trade goes under that. You need that reference point low there, because many times it will just spike down, come back up, find support on this level, and then continue to the upside. So you need it to fail at that point and come down. Then you can look to also add under the 10, and you can also look to add under the 800 area through here, and then profit taking can come into these levels here at that stage. And we can look to see how we're going through that point, because we would get 5 waves here, and then we would get 3 waves back up if that's the case, if we're going to be more bearish, and then we can look through that way there as well, because if we come down through here, we can go short again through there after these 5 waves, but we need to know if we've got an A and a B and a C, and we're going to be going up from that point. So we'll be able to quite easily look for short trades below here as well. So look, there's a lot of tactics involved here. I know, many people looking at being bullish, and there's many people looking at the market being bearish. I just think that we need to stay with the evidence, and we need to basically trade support and resistance, and work it from that point. And we've got this beautiful level to work with, the 2800, group 1 above and group 2 below here. So look, as this stands here at the moment, the way I was looking at this here, if I go to the tick chart here, so from the top here, we know that we're counting 5 waves down. We're looking at this as an A wave here. And you can quite clearly see, and this is the same for the cash market here, that this is in 3 waves here. That's why we were looking for 5 waves here. In those 5 waves though, sure, we can count this as 1 and 2 and 3 and 4 here and 5 here. And it may be the case, but the problem with that is wave 4 really overlaps wave 1 here. So it's a bit difficult to assume that. It could be the case. It could be just a weird thing going on. So there's 2 things here. Is that first of all, this move down through here is corrective, so we should see a move up here, and normally the move up here would be in 5 waves, but the problem with this 5 waves is wave 4 is overlapping this, so it could be wave 1 and wave 2, and then wave 1 and 2 of a smaller degree, and going up for 3rd wave and a 4th wave and a 5th wave, and then would still have this. So it makes it kind of bullish at that point. So realistically, would need to move that wave 1 here and that wave 2 here, and then look at this here as wave 1 and wave 2 here. That would make a better, more logical count. But in doing that, it puts it into a bullish mode at that point, because 5 waves up from this one here would be 1 and 2 and 3 would be up here, 4 here and 5 here, just for the top of the 3rd of 2 to 3 here. Then would be 4 and 5. So we're going, we're heading into a bull market at that point. So that's why using the 2830, the top of subgroup 1 here, as support, which would be above the 61.8%, and that little pattern that I just showed you on the 2830, that's the one to take you higher at that point. So long above that, short below this number here, and that will keep us on the right side at this point. As you know, I've got different counts in the bigger picture. So today I'm just staying with working with what we've got here, because this is where it's going to happen from. This is where the action is going to be, and getting on the right side here is the most important point for this market. Alrighty, thanks for tuning in. Cheers.